The financial system is a very important part of any economy. If it is not functioning, nearly all forms of activity, from payments to financing to trade, would almost be impossible. For several years, however, global investors have largely ignored it, despite its importance and opportunities within the sector. This is understandable due to the backdrop of anemic economic growth and the persistently low interest rate environment. However, this is looking to change. I have a positive outlook for the economy and believe the current cycle is different from the previous one after the great financial crisis. This is due to a number of reasons. First of all, the Fed's new policy aiming to achieve inflation moderately above 2% for some time, and also the $5 trillion fiscal stimulus in the US in response to COVID-19, they are both highly accommodative. The US consumer savings rate is high compared to history and can lead to an eventual rise in consumer spending. The outlook for the US housing market is strong. And finally, we have the imminent deployment of vaccines and the reopening of the service sector in a number of countries. Overall, an improving economy is typically positive for financials. To take advantage of the opportunity, the fund invests in well-capitalized banks that will benefit from the acceleration in economic activity and the eventually higher level of interest rates. Financials is one of the few sectors that can earn spread income and increase earnings as interest rates rise. Other than banks, insurance companies can also benefit from rising yields. So I have positions in well-brand life insurance companies with strong capital positions and attractive free cash flow. Beyond banks and insurers, the fund also invests in companies across various subsectors. It has positions across payments, financial technology, brokers, asset and wealth managers, each of which have their unique trends and avenues of growth going forward. Asset gatherers, such as asset managers and wealth managers, benefit from flows into the markets and rising asset levels. Financial technology companies, including payment system providers, help modernize our financial infrastructure. The fund also owns financial companies that win in the marketplace due to their strong technology capabilities. As a final example, the fund has positions that benefit from demographic trends, such as the rising power of emerging market consumers and the aging population in a number of countries. The aging theme benefits companies that offer annuities, pension risk transfers, and pension saving schemes. Investing in this way, in companies of different subsectors, allows investors to have diversified exposure to various underlying themes that are going on in the global financial system.
Potential investors should read the prospectus before investing in the fund. The value of the units in the fund and the income accruing to them, if any, may fall or rise.